Congress is about to put crypto under the microscope, and the outcome could redefine everything from price action to payment rails. Between July 14th and 18th, the U.S. House of Representatives will debate two landmark bills: the Anti-CBDC Act, which would block a Federal Reserve-issued digital dollar, and the Genius Act, aimed at building a licensing regime for stablecoins. If the Anti-CBDC Act passes, Washington essentially blesses private sector dollars like Ripple Dollar and Circle's Dollar Coin as the future of digital cash. The Genius Act would wrap them in clear bank-style oversight. Goodbye regulatory fog. Hello institutional green light. XRP and XLM, already ISO 20022 ready, stand to benefit from a standards-based environment where interoperability is mandatory, not optional. Rumors of a hot memo have traders buzzing. It suggests regulators might someday assign fixed values to XRP and XLM to maximize settlement stability. Pegging a crypto is a double-edged sword. Volatility disappears, but so does pure market discovery unless every token is fully collateralized. Ripple holds roughly half of the total XRP in escrow or treasury accounts. Backing the entire float with fiat or gold would require a balance sheet pivot of historic scale. Until that happens, supply and demand economics rule the chart, and today's price discovery keeps corridors liquid. Meanwhile, the market is remarkably calm. XRP trades around 2.26. Bitcoin hovers near 109,000. Ethereum sits at 2,600 and XLM at 0.245. Sideways action masks institutional accumulation. Net inflows into XRP this week hit $10.6 million, pushing the monthly tally to $21.2 million and the yearly haul to $219 million, closing it on, and in some cases outpacing Solana. Quiet money is often smart money. Capitol Hill isn't the only arena in play. The Senate Banking Committee will review market structure proposals the same week the House debates stablecoins. That means both chambers will be writing crypto's rulebook in parallel, an unprecedented convergence. At a leadership shakeup at the SEC, Gary Gensler is out, former Commissioner Paul Atkins is in, and Atkins has a track record of favoring innovation over punitive regulation. For XRP, that shifts the default stance from prove you're not a security to prove you add value, a far easier case to make when payment corridors are already live. Then there's fiscal reality. PolyMarket odds put a 93% chance on U.S. national debt breaching $38 trillion this year. More debt means more treasuries, more repo activity, and greater pressure on traditional payment rails to clear collateral quickly. U.S. Treasury Secretary Scott Bessent just pegged potential stablecoin demand in treasury markets at over $2 trillion. Ripple Dollar, already NYDFS approved, is positioning to be the plug-and-play rail for that wave of collateral. Each mint expands liquidity. Each redemption burns XRP fees and tightens supply. That reflexive loop isn't theory, it's ledger math. Institutional signals keep stacking. Amina Bank in Switzerland has confirmed live support for Ripple Dollar in its settlement stack, adding a European node to Ripple's growing web. Over the last 48 hours alone, 30 million new Ripple dollars were minted, suggesting onboarding pipelines are being filled ahead of regulatory clarity. Simultaneously, Ripple's application for a U.S. banking license is working its way through the system. If granted, Ripple could hold fiat deposits, issue credit, and offer insured custody, effectively acting as a crypto-native correspondent bank. Where does the fixed value theory land? Pegging XRP or XLM to fiat could make cross-border payments even more predictable, but only if deep reserves absorb shocks. Until such reserves exist, the peg remains a thought experiment. What isn't hypothetical is the move toward regulated, enterprise-grade rails. With CBDCs politically toxic, Congress appears ready to crown private stablecoins as the official digital dollar layer. While tokens like XRP handle the bridge work that stablecoins alone can't solve, instant forex without counterparty risk. Zoom out, and you see three converging currents: legislative clarity, institutional inflows, and macro pressure for ballooning debt. Each current feeds Ripple's core thesis that efficient liquidity is the next frontier of finance. If lawmakers lock in anti-CBDC language, Ripple dollar could leapfrog central bank pilots. If the Genius Act sets capital standards for stablecoins, institutions get a compliance blueprint. If national debt keeps spiraling, markets will demand faster, cheaper settlement rails to handle the deluge of collateral. XRP and Ripple dollar sit at the intersection of all three. Nothing is set in stone. Bills can stall, committees can amend, and political tides can turn. But this week's calendar is the busiest, most consequential stretch of crypto policy debate in U.S. history. Markets might look flat, yet foundations are shifting under the surface. Traders focused solely on candles risk missing the structural realignment unfolding in real time. If you're new here, hit subscribe, ring the bell, and drop hashtag XRP in the comments so we know you're part of the conversation. Smash that like button to boost the signal. The rails of global finance are being rewired as we speak. Stay tuned so you don't miss the moment they light up.